Good morning, everyone. Welcome to our first episode of 4 a.m. in quarantine. Super excited to launch this during these uncertain times, during times of everyone being at home, being quarantined. Figured this was the perfect time to get this out. And we have a very special guest with us this morning, Vinny Galiano, who also happens to be one of my closest friends. Vinny is the president of the Galiano Group. Galiano Group is an individual investment firm holding public and private holdings, including Palanteer, Airbnb, and even an early investor of Uber. Vin, pleasure to have you, man.
Pleasure to be here, bro. I appreciate you having me.
Absolutely. Wouldn't have it any other way during these times of quarantine. Can't see each other in person, so we got to do this via Zoom. But listen, man, I'm excited to have you on, and just want to give a little bit of an idea of where we are. I know you are a very savvy investor in the market. And I definitely want to take that and portray it onto you and see exactly where your head's at with everything going on. I know there's a million different ways we can go with this, but let's start. What are you doing over the past few weeks of quarantine, man?
Yeah, well, look, man, obviously, like I said, I appreciate you having me. And furthermore, anytime I do get to see you, whether it be through a computer screen or in person, it's always a pleasure. So regardless, but look, I'm doing everything that likely everybody else is doing, except I'm tied to the markets here, right? So this is a very, as you mentioned, uneasy time. Okay, and so when you have uneasy times in the market, there are uneasy people. People are on edge. Okay, and so what I'm trying to do is not pay too much attention to the intraday moves, right? I'm trying to make sense of it all, and I'm trying to create some sort of a roadmap forward. Right. I mean, I think that is probably the most important part of it all, right? Where are we going to be 6, 12 months from now, right? Somebody like myself, what I'm trying to do is I'm trying to do a good amount of rebalancing and planning, right? That's ultimately what I'm trying to do.
Absolutely. Yeah. I mean, is there much else to do at this point? I know that you're very heavily invested and, you're very deep into this. So it's not going to be like, your experience is obviously completely different than someone who's got in the past 6, 12 months into the market, or someone who's looking to get into the market. But since this fallout, was this something that was, inevitable, or was this, this whole coronavirus, was this the last Jenga piece that kind of made this whole thing come tumbling down? Give me a little bit of your, your bird's eye view on this situation, and, how we can kind of take it from here. And was the overextension something that was inevitable, or, what do you think here?
No, for sure. Look, I mean, here's the thing, right? If you invested the day before the internet bubble burst, or if you invested in 2008, the day before Lehman Brothers announced bankruptcy, you're up 100% plus on your money, right? So regardless of your entry point here, right, it's still not a time to panic depending on your time horizon. If you like those companies then, you should like them even more now, right? As it pertains to the last Jenga piece, yes, the last Jenga piece was certainly the coronavirus. This market was absolutely overextended. You found yourself with companies that were incredibly overvalued. And there was just too much blind optimism in the market. Okay. So when it comes to an unwind in the market, okay, this coronavirus did throw the sheets off a lot of people. Right. It effectively exposed them to everything that they kind of were turning a blind eye to for quite some time. There's a lot of uncertainty now, specifically because of credit markets and bond markets and equity markets. Right. So when it comes to the overall market and the way that the market is reacting to something like the coronavirus, you find yourself now in a 30% down market. Okay, so this is a lot of money that a lot of people are losing. Okay, when you're finding yourself in a 30% down market, the last thing that you want to do is overreact,
Mm.
Okay. It's human nature to want to buy low and sell high, right? That is the key. That's the goal. However, if you actually think about both of those actions, neither of them should be comfortable. Neither of them should be comfortable at all. When you're buying high, it should feel uncomfortable. You should feel like you shouldn't necessarily be buying at this point. When you're buying low, it should feel even more uncomfortable. Okay. Because that's likely the point where you have something like a last Wednesday, and you kind of hit that peak of a bottom. Okay. And it's where everyone else is running away. Right. So when you're finding yourself in a position where you want to buy or sell, okay, my advice would be to buy and sell for the long term, right?
Mm.
Buy on the down days, buy on the up days, and sell when you need the money, right? It's certainly not a time right now to try and time the market.
Absolutely. Yeah. I mean, now in your like what types of I guess how are you taking your approach to, you know, hold yourself back from wanting to sell at this point, or wanting to buy just in that, you know, in that erratic type of emotion, right? Because
Right.
I know that a lot of investors, you know, I guess emotions obviously are going to come into play when you're investing. Obviously, how do you
Yeah.
channel those emotions in the right way, right? So that you make sure that, you know, your emotions aren't taking over your business and your investment portfolio, and, you know, you're making that cognizant decision every time you're trading.
Right. Look, you have to look at it from a logical standpoint. Okay. I wouldn't consider myself a trader. I would consider myself more an investor. Likely, the majority of people that will watch this are probably in that same boat.
Mm.
Okay, I'm not. I can't sit here and tell you that I can time the market, and most other people can tell you that they can't time the market as well. Right? You might have that lucky one or two times where you've, you know, bought at the right time and sold at the right time. But it's not. That's not a good long game, right? For people that are not chartists and rigorously watching this market. It's not something that's going to play out well for the long term.
Mm.
So what I do, when you have a drastic fallout, right? A month or two prior to this, I would say in January was probably my last big buy. Okay, prior to this whole fallout, I was buying those companies with intention, right? I mean, they were companies that I liked at that price. So they're companies that I like even more at this price. Now, those are companies that are not going to be affected, okay, or will be affected, but will be affected in a very in a much more marginal manner than a lot of other companies will be with this whole fallout, right? With the whole
Mm.
health issue, and the and limited exposure to what their market used to be. Okay. So when I'm approaching and I'm purchasing those companies, I'm taking a look at here. I'll give you a good example. Uber was a 45 to $50 billion company prior to this fallout. Okay. As of last Wednesday, Uber was a $20 billion company. Okay. Now, if you put that into if you correlate that to their balance sheet, this is the perfect example. They had $10 billion on their balance sheet. So Uber was almost worth more in cash than it was as a company. Okay. Now, that doesn't really make sense. Uber is not going to just stop making money and halt making money from here. They have the eat side of their business. They have the the rideshare side of their business, which is dramatically being affected. But they do have the eat side of their business, and they are going to get back to doing business when this is all said and done. So you have these companies that are on a brief downturn. Okay, Shopify, the Trade Desk. There's a whole Amazon. There's a whole great deal of companies that are out there that were brought down with this crash. Okay. And the technicals and the technicalities of the crash themselves. Okay, you have ETFs that are effectively bundles and bundles of companies. Okay, ETFs allow you exposure to a bundle of companies that you wouldn't have exposure to, in your portfolio by buying them individually. So when you have these ETFs being sold off, all of these companies are moving down systematically. Okay, so you'll see Uber and Amazon and companies like Carvana that have terrible balance sheets all move at the same rate. Okay, so what you want to do when they're all moving at the same rate like that is buy these high quality companies, right? Buy the companies that you know will make it to the other side of this because of their balance sheet, and buy the companies that you know will make it to the other side of this because they have limited exposure to what's going on.
So going back to, you just spoke about Carvana real quickly, not having as of an attractive balance sheet as Uber does.
Mm-hmm.
So let's say you did own some Carvana shares
Right.
prior to this all happening. What are you doing with those shares? You still holding on to them, or?
Yeah, so good question. So no, we rotated out of Carvana. Okay, so
Gotcha.
so this is a good time to do some rotation.
Mm.
Okay, rebalancing of your portfolio would be the way to say it. You want to make sure that moving forward, you have the risk aversion, okay, that you need. Okay, you have an unprecedented buying opportunity. Okay,
Mm.
an opportunity to pick up these companies at a much cheaper value than you would otherwise. To take money from less quality holdings and rotate them into higher quality holdings is something that I would absolutely recommend. You do. This would be a good time to take a look at your portfolio, see what your exposure is, and see where you would want to rotate.
And for someone who potentially isn't as heavily invested right now, but is looking to get into the market, or is somewhat new in the market and looking to take advantage of what's going on right now and capitalize on these opportunities, what would you say to someone like that?
I think now is as good a time as any, right? Now is as good a time as any to start. Okay. So if you are not invested in the market at all, like I said, now is as good a time as any. I go back to my point earlier. If you did invest, okay, prior to the Lehman Brothers announcing bankruptcy, prior to, you would still be up 100% on 70 to 100% on your money today. Okay, if you invested at the bottom of that
Mm.
trough, you're up somewhere around 150 to 160%.
Wow.
So timing is everything, right? Timing is important. But over the long term, you have to understand you will go through these dramatic gyrations, okay, that they don't feel good, right? I mean, this is your money, right? It is emotional. It's an emotional sport, right? You want to make sure that you are investing your money in the right place. But from here, I mean, you have a very, very good opportunity to buy high quality companies at a much lower valuation, and that to me is always a bright side.
Wow. Yeah. I mean, that's some amazing insight. And now going into the next 6, 9, 12 months, I know no one has a crystal ball, obviously, right?
Mm-hmm.
It's tough to really project exactly what we're going to see over this next 6, 12 months. But, give us a little bit of an idea of how, how you're envisioning this next 6, 12 months. And I know that you're saying that you're doing a lot of rebalancing, but once you're kind of, your rebalancing is in place, what's next,
Right. So look, analysts are effectively saying, okay, that the fallout of this in its totality will be 30% US GDP loss.
Mm.
Okay, so by the numbers, the US nominal GDP, okay, on a yearly basis is around $21 trillion. Okay, so now we're talking about 1/4 of a 30% loss, which equates to $1.75 trillion, if my math is correct.
Wow.
Right. So that's a large loss.
Yeah.
Okay. However, from the peak to the trough, we wiped out nearly $8 trillion of market cap in companies. Okay. So moving forward in these 6 months, okay, what happens is the market will always aggressively price in worst case and best case scenarios. So you're going to have a lot of gyrations moving forward. Okay. You're going to have crashes down, and you're also going to have crashes up. Okay. So when you have, for example, this week was a technical crash up. Okay. Not much more you could be extended to the downside. So you bounce back, and you bounce back in a hard way. Now, there are monetary and fiscal policies being rolled out, which of course does boost the market. But to answer your question, moving forward in the next 6 to 12 months, now is a good time to either, if you are not invested, begin getting invested. Okay. And that's not to say, when I say begin getting invested, I have buddies of mine that if they have money set aside, they want to throw it all on the market at the right time. The answer to that is there is no exact right time. It's impossible for me to know that. It's impossible for you to know that. It's impossible for anybody to know that. In retrospect, it's always easy to pick out what the best time would have been. But what you want to do here is you want to go ahead and set money aside for investing. Okay. So start to pick on companies that you admire, right? Companies that you use every day: Amazon, Microsoft, Apple. Expose yourself to the companies that are definitely going to be there on the other side, and probably going to be even stronger. Microsoft announced an acquisition yesterday. In this market, Microsoft is buying companies. Companies are going out of business, and Microsoft is buying companies. So you want to make sure that you're exposed to the companies of high quality first. Once you have a stable foundation, then you can start putting on some risk, right? Then you can start putting on some smaller companies, exposing yourself to companies that you know are a bit more volatile in these markets. But 6 to 12 months from now, I do believe that we will have a higher market. I do believe that the fallout of this will have run its course, and hopefully would have run its course with as small amount of human loss, of course, as possible. But again, now is as good a time as any to find yourself invested in the market.
Amazing. Yeah. I know we had a conversation a few months ago, even maybe a few weeks ago, about you potentially getting into, starting your own fund, right? And, letting others, invest with you, because, having such a successful track record, there's people that, necessarily want to get into the market, but don't necessarily want to, worry about the day-to-day burden of, what the market's doing, and have a professional like yourself, kind of guide them in that right direction, or, help them and hold their hand throughout the process until they're ready to go on their own. Where are you at with that, man?
Yeah, it's something that I'm still working on, right? The asset management side of what I'm looking to do is something that is inevitable, right? I mean, there's a lot of it's family, right? It's friends, it's and then clients themselves. I mean, you find yourself in a position where you can change the trajectory of people's lives, hopefully in a positive way. Okay. And so when it comes to financial freedom and being able to allot people financial freedom and expose them to markets that they may not have otherwise been exposed to, whether it be public or private, is something that I'm definitely interested in, and something that I'm definitely working on behind the scenes.
Love it, man. Yeah. I wish you the best of luck there, and I'll be the first one in there with you. I'll be investing with you. I know I'm heavily invested in the real estate market and everything we do on that side of things. But, definitely want to get deeper into the market and would love to invest side by side with you.
Awesome. Well, would love to have you, man.
Absolutely,
Absolutely.
man. No, I appreciate it. And, one last thing before we wrap up, just giving someone some sort of advice. I know you gave a little bit of advice, but where to start, right? When you first got started investing, was there a certain channel that you went to every day to kind of give you some insight as to, what those companies are that you want to get involved in, or a certain analyst that you like to listen to, certain books? What are something that someone could actually hold on to right now in the next few weeks that can really, put them in a better position to invest and create, that first step towards financial freedom and in the market?
Yeah, good question. So, anytime that you walk in my office, you will always have CNBC playing in the background, right? CNBC exposes you to the markets in a unbiased fashion. It allows you all the company, top line company news that you do need. So for anybody just sitting on their couch, that would be a good place to start. If you wanted to dive a little bit deeper into it, there are definitely analysts that I do like. There are analysts that I do admire, and I do kind of, I guess you could say, like their overall outlook, okay, on the way that they look at the markets. Josh Brown with Friedholz, he's a very matter of fact analyst that I like to listen to on a day-to-day basis. He has a lot of similar holdings, smaller companies. Slack is one of his largest holdings. So he's investing in the same, I guess, in the same areas that I am, right? Not exactly these trillion-dollar conglomerate companies, but middle of the pack, mid-cap companies, that there's significant upside to. Okay. So when you get started, my suggestion would be to look into the markets a little bit, right? There are applications out there. Start to get to know your money a little bit more. Right. Using applications, even net worth applications, that you can go ahead and see where you are financially, how financially sound you are, what sort of dollar value you have available for investment is also probably the most important aspect of this all. Right. You want to make sure that the money that you're putting to work is being put to work and is allowed to work for the amount of time that it should be put to work for. Right. As opposed to investing something and taking risks and taking gambles. So getting to know your money a little bit more, getting to know the markets a little bit more, just through your everyday news channels is a good place to start.
Perfect. Hey, man, I know we can go hours on end here and continue this conversation deeper and deeper. You and I have to have a conversation off the channel, and definitely have you back here for sure. I think this is going to be really, really, really insightful for, people who are heavily invested in the market right now, for people who are middle of the road, and for people who, want to get involved and want to just get started at a great time, like you said. And I think people are going to take a lot away from this. So I really appreciate you being here, as a friend, as a business partner. And I wish you the best of luck in the market. And I'm sure you'll be coming out on top on the other side. Excited to see where everything goes. Excited to see where all your business ventures go as well. And keep me posted on that fund, because I'm your number one client. Appreciate it, man. And again, thanks for being here.
No, you got it, man. I appreciate you having me, and any time that you want me back, man, I'm happy to be here. So I appreciate
Absolutely.
that. I hope that everybody that that I was able to reach today is feeling a little bit better about themselves, is able to kind of take these steps confidently, and hopefully we can check back soon.
Yeah, and that's the most important thing, honestly, is building confidence in people, because I know that a lot of people, have maybe the funds, or have been looking to have one foot in, one foot out. But it's just that confidence level and understanding that you're in good hands, right? And you have the knowledge to be able to go in with the utmost confidence that you're gonna do this, right? Whether it's you're even if you're riding this for the long haul, you have the confidence to be able to withstand a downturn like today.
Absolutely, man. That's what it's all about.
Thanks again, man. Appreciate it, Vinny.
Right.
We'll catch up soon. All right, man.
You got it. No problem at all. Thanks, man.
Appreciate it.